Today I want to share with you a $45.6 million loan that we did in December 2020 to Blackhall Studios, a soundstage business in Atlanta, Georgia. Soundstages are an interesting asset class, and I'll go through some aspects of that. But more interestingly, this highlights the aspects of Stabilis, which is sourcing, structuring through complexity, and finding win-win solutions for our borrowers. Soundstages are a unique asset class. Blackstone did a $1.6 billion transaction in July 2020, which Goldman financed. Also, Silver Cup Studios was sold to Hackman at a 6.5% cap rate in October 2020. Our borrower built his soundstages in Atlanta, that is the third largest after LA and New York location for filming. And filming content has become more in vogue with Netflix, Amazon, Disney, and everybody, both traditional and new entrants, wanting content as a result of streaming increasing dramatically. He built the soundstages with a construction loan, was taken out finally by semi-permanent financing in the form of Korean bank debt. Now, and he was in the process of selling his business to a private equity firm and having a monetization event of a successful ramp up of a very good business. Fast forward to COVID, and several things happened. The discussions with the private equity firm fell apart over price discussions because they wanted to pay 80, he felt that was a low price. The banks wanted to reduce exposure to the United States. They had other exposure in real estate to the United States, and they called their loan. And third, he got a lis pendens, which was a claim from a former employee that he was owed something from this liquidity event that was occurring at that point. And the combination of those really created a liquidity crunch for him. I got a call from my friend who had actually brought the Korean banks in, saying she needed somebody who could structure through a complex transaction but a valuable asset. We were able to do that by finding a solution to solving the lis pendens issue while giving him liquidity and time. We did this by acquiring the bank debt and restructuring it simultaneously to mimic a new loan that we would have made. And at the same time, we were able to give him time. So we gave him a year of financing so that the negotiating leverage that this hold-up value had went away. Long story short, in 3 months, he was able to negotiate a sale of his business for $120 million, which was a lot more than the $100 million that was initially contemplated and the $80 million that was discussed during COVID. He was able to lift the lis pendens and settle it for a much smaller amount, and he paid us off. We charged 11% for this loan plus 3 points. We were able to make this loan between Thanksgiving and Christmas and solve this problem in a short period of time while earning a good interest rate for ourselves, a win-win solution.